following is an update and technical analysis on crude oil, West Texas Intermediate futures based upon the daily interval in which I had noted the testing of crucial resistance in my last video titled Black Gold Challenging the Major Resistance Levels on the 19th of December 2023. We were trading spot price 74.03 a barrel, and the 73.94 transitioning zone correlated with the parabolic downtrend line called a major duo price resistance level, in which it would be gearing up for a great risk-reward ratio to the long side if and when some of these key additionals levels were taken out with authority and or conviction, where we sustained a nice clean divergent low. We had positive and or bullish divergences constructed on all four key technical momentum indicators, with the 72.70 price support down below in correlation of the 786 fibs, and the 70.09 even better price support down, with a plethora of major reactionary highs and lows really across the entire sphere, and the ultimate case of the 66.89 monthly interval price support, in which I will deep dive into that inflection point, and then upon zooming in to the hourly interval for some additional clues and or pivot points regarded upon any active and or day traders. And here's the update, where we completely broke out, and I will zoom in to see the additional reactionary highs and lows really across the entire sphere here. Finally took that level out, was regarded, backtested the 75.27 price resistance, was rejected pretty impulsively, and had a nice clean reactionary low right to the button off that primary parabolic downtrend line in correlation of the 72.70 price support, consolidated violently throughout the weeks on these daily candle closes. Once again, rejected very impulsively here, backtested that level once again off the 72.70 price support, and here we are putting in a triple bottom right amongst the 70.09 price support level, really to the button here, with three major reactionary lows there, off to the races since then in the entirety of that trade thus far, in correlation in knocking the fourth price support level up above the 618 fibs retracement, and the entirety of that move was good for 13.18% in gains. And here we are testing the 618 fibs retracement in confluence of the 200-day moving average, called a duo transitioning price support of resistance, and it would be pivotal for long traders and or bull traders to pop this level with a solid green candle infused close up above to increase the odds for a much larger move on a re-challenging of the 50% fibs retracement, call it around the 81.05 price resistance. The biggest level that was taken out with conviction was the 75.27 price resistance. It has a lot of correlation to the monthly interval, but major reactionary highs that were banging on the door for weeks on end here. And once that level was taken out, that's how you know the level was so psychological, when you had such a short squeeze setup on a large green infused candle close breakout above that level. And here we are testing dual price resistance as of now, taking nice, if not scaling out process and covering some profits. Make no mistake about it, this could be the beginning stages of a much larger move to come. I have added a new primary reactionary uptrend line with major reactionary lows across the entire sphere here. It will come in confluence of the 50-day moving average and the 786 fibs retracement, call it 73.08 price support. And that is what you would call a triple transitioning price support level for any buyers and or value traders to hone in on to buy the dip for a prolonged setup on a great risk reward analysis to the upside if and when some of these key transitioning points are once again revisited. Short sellers, bear traders, they want to see a solid red infused candle close, big breakdown, sell signal down below that inflection point to usher in a much larger waves of stops and or margin calls to go off to re-challenge the 70.09 price support, and then additional bigger monthly interval 66.89 price resistance down below. You have an early indication of a bearish crossover in the stochastics 1033, stagnating below the 85 threshold, so that could be an early indication for some downside to come. You have the MACD crossing over the zero line threshold in a bullish crossover, where some details of some health is being poured back into the trade of the technical momentum indicators off the daily time frame. As for short sellers and or bear traders, honing in on a dual price resistance for a short trade setup, call it an aggressive short trade setup with some key fundamental headlines rocking across the entire crude oil space. And when I mean aggressive, where crude oil is beginning to show optimism following last week's encouraging price surge beyond the 75 threshold, which was this key level that was taken out off the monthly price support in correlation, where the heightened tensions in the Red Sea region add to the current scenario, with anticipation building around the U.S. response to recent attacks. Today, with the announcement from Saudi Aramco, the state producer in Saudi Arabia, revealing its decision not to increase daily oil production to 13 million barrels, as directed by the country's energy ministry. This move on the surface may grant Saudi Arabia increased flexibility to sustain a restrained output policy beyond the initial quarter of the year, and that could be a very bullish, positive, fundamental catalyst for a much larger move to the upside, in which you were to scale in short here with a great risk reward ratio to the downside, if and not revisiting of the primary reactionary uptrend line, and then ultimately the utmost safeguard around the 50% fibs retracement, call it 81.12 price support, and that level is taken out. That will be exceedingly more, ever more bullish to re-challenge the 382, 84, 44 price resistance up above. Zooming you out to the much larger picture of the crude oil space within the monthly interval, and we had big moves right off that 70s, the 66.89 price support level, and that has been defended heavily amongst long traders and or bull traders, really going back since 2021 of June here, and that has been successfully big buy orders, which came with great gains to the upside each and every time it was revisited and or reflected upon, in double-digit gains to the upside. So make no mistake about it, this is a violent consolidation that has been going on for multi-year consolidation, and it could have the beginning stages of a potential much larger move to come, especially when you have the moving average convergence backtesting its zero line threshold, which could conform into a bullish crossover here, only spurring additional health into the much larger time frames of the crude oil space. Color tanned monthly interval price support and resistance levels, and these will be additional levels to hone in on and or respect upon trading the inner workings of the daily interval time frame. You could additionally make the case for a beautiful, well-defined breakout of this neckline off this inverse head and shoulder classic looking bottom with major reactionary highs across that entire sphere with additional reactionary lows, and that was taken out with conviction off a classic inverted head and shoulder looking bottom. Do not underestimate, when you consider the scope of how violently this consolidation phase was taking place, do not underestimate how powerful an inverted head and shoulder classic looking bottom could transpire on a much larger rip your face off rally to the upside could occur. And upon zooming you in to the hourly interval, and some key additional levels that I see transpiring are the 236 fibs retracement in confluence of this minor reactionary uptrend line with major reactionary lows across that entire sphere, where we had a false breakdown. We backtested off the 76.12 price support, which is the 382 fibs retracement, and that was defended heavily by long traders and or bull traders only to snap back and or trap a ton of shorts that were in the pool here, backtested once again off that primary reactionary uptrend line, and here we are reclaiming the major transitioning point of price support. Do not underestimate how bullish a false breakdown could occur on a prolonged setup to the upside, where long traders and or bull traders need to defend the 236 fibs retracement in confluence of the primary reactionary uptrend line really at all cost. Call it a duo and or transitioning price support level with the 50 hourly moving average hovering in down below. Short sellers, bear traders, they want to see a solid hourly additional candle close below this key inflection point, issuing in which you would call a secondary breakdown, where the backtest and or retest of this primary uptrend line would offer the most valuable risk reward short trade setup to the downside. Make no mistake about it, this has the potential for a classic head and shoulder looking top, the split of the neckline being the 382 fibs retracement, and that would issue in off a ton stop to go off, in my opinion, on a rechallenging of the 75.28 price support and the 73.98 618 fibs retracement, where you have that additional primary reactionary uptrend line, which was the biggest inflection point in correlation of the 786 fibs retracement. If and when we go on to rechallenge some of these big price support levels, we had taken out this primary downtrend line, minor primary uptrend line, had once again had a false momentum fueled overshoot back into the downtrend line range, which was only snap back and or trapped a ton of shorts in the pool here, back tested 3 more times, and it was off to the races on a much more prolonged move to the upside, really based off this divergent low, which was the technical induced catalyst with multiple divergent lows. We had positive and or bullish divergences constructed on multiple technical momentum indicators with the bullish crossover, and that has been situated with a prolonged bigger move to the upside. And that is since then, make no mistake about it, crude oil has only transpired in a noteworthy price action of an uptrend.